If you were born before 1966 and you have not yet looked at your 2025 tax return, stop everything right now. Because the IRS just confirmed 6 specific changes to how seniors file in 2026 that most people born before 1966 have never had explained to them in plain language. New forms, new deductions, new deadlines, new automatic flags that are already delaying refunds and generating notices for seniors who filed the same way they always have, not knowing that this year the rules changed. And the seniors being hurt the most are not the careless ones. They are the careful ones. The ones who filed early. The ones who trusted their preparer. The ones who assumed that if something important had changed, someone would have called. Nobody called. Today we are walking through every confirmed 2026 tax change that affects people born before 1966. What each one means for your specific return, and the exact actions you take before June 15th to make sure none of these changes cost you money you were legally entitled to keep. Which city and state are you watching from right now? Drop it below immediately. Because these tax changes interact with state returns differently depending on where you live, and I need to know exactly how many people in this community are already affected. Drop your city and state right now. Here is change number 1. The new senior deduction that is already being missed on thousands of returns filed this season. For tax years 2025 through 2028, the IRS confirmed a new enhanced deduction specifically for seniors, in addition to the current additional standard deduction that already exists under existing law. To be eligible, the person must be 65 on or before the last day of the tax year. If you were born before January 2nd, 1962, you may be eligible for this enhanced deduction for seniors. Your deduction will be limited if your modified adjusted gross income is more than $75,000 for single filers or $150,000 for married filing jointly. Social Security Administration. Here is what that means in real dollars. For the 2025 tax year, individuals aged 65 and older may claim an additional $6,000 deduction. This new deduction is in addition to the current additional standard deduction for seniors under existing law. $6,000 per eligible person. Stacked on top of deductions that already existed. The basic standard deduction is $15,000 for single filers and $30,000 for married filing jointly. The additional deduction for age 65 and older is $2,000 for single filers and $1,600 per qualifying spouse for married filers. The new $6,000 senior deduction is per eligible individual and phases out based on income. Capital Skyline. Add those 3 numbers together for a single senior 65 or older. $15,000 plus $2,000 plus $6,000. $23,000 of total deductions shielding your income from federal taxation before a single other calculation runs. For most seniors on fixed incomes, that number covers a significant portion of their annual income entirely. Have you verified that the $6,000 enhanced senior deduction was applied to your 2025 tax return? Yes or no? Drop it below right now, along with your city and state. Because the number of seniors who filed their return without this deduction is one of the most important things this channel has ever looked at. Here is change number 2. The SALT deduction increase that is changing the itemizing calculation for seniors in high tax states for the first time in years. The Schedule A instructions now confirm that the 2025 state and local tax deduction limit increased to $40,000 from the previous $10,000 cap. The limit begins to drop when modified adjusted gross income is more than $500,000 for single filers and $250,000 for married filing separately. But it will not drop below $10,000. Elmira. For seniors in New York, New Jersey, California, Illinois, and Massachusetts who own property and pay significant state income taxes, This quadrupling of the SALT cap changes the standard versus itemized calculation completely. A senior homeowner paying $15,000 in property taxes and $4,000 in state income taxes was previously capped at a $10,000 SALT deduction. That same senior in 2026 can deduct the full $19,000. Combined with the enhanced standard deduction comparison, run the numbers before assuming the standard deduction is still the right choice for your specific situation this year. Here is change number 3. The June 15th deadline that applies to a specific group of seniors and that most people in that group have never been clearly told about. American expats, US citizens and resident aliens living outside the United States automatically receive a 2-month extension to June 15th, 2026. However, interest accrues on any taxes owed from the original April 15th deadline. June 15th is the automatic 2-month extended filing deadline for US citizens and resident aliens living outside the US for their 2025 returns. Capital Skyline, NerdWallet. If you are a senior who lives outside the United States for part of the year, or if you have a child or family member who is a US citizen living abroad, June 15th is the relevant deadline. The extension is automatic. No form required to claim it. But interest on any taxes owed started accumulating on April 15th. Every day between April 15th and the day you file is a day interest is running on any unpaid balance. Here is change number 4. The Form 1040-SR update that seniors born before 1966 need to know before their next filing. Form 1040-SR, the US tax return for seniors, is available to you if you were born before January 2nd, 1961, for the 2025 tax year. This form is specifically designed for senior filers, with larger print, a built-in standard deduction chart, and a clear age verification section. The IRS has implemented stricter banking validation rules for the 2026 season. If the name on your return does not match your bank profile exactly, your deposit is rejected, and the IRS must issue a paper check, adding 4 to 6 weeks to your timeline. AIU Web, Social Security Administration. Verify today that the name, address, and bank account information on your tax return exactly matches your current bank records. 1 digit off, 1 middle initial missing, 1 outdated address. Any discrepancy triggers an automatic flag that delays your refund and may generate a notice requiring identity verification before processing continues. Here is change number 5. The new automated flag that is hitting seniors who claimed the $6,000 deduction incorrectly. The most common delay in 2026 stems from the new schedule used to claim the $6,000 senior tax deduction. Because this deduction has a strict income phase-out calculation, the IRS computer system is automatically flagging returns where the reported modified adjusted gross income does not match the 1099 forms on file. If you estimated your income to qualify for the full deduction, but your 1099-R shows a slightly higher distribution, the system freezes the refund. This triggers a math error notice, which requires a response before the check is released. It turns a simple filing into a months-long correspondence battle. Social Security Administration. If your 2025 return has already been filed and you claimed the $6,000 senior deduction, verify today that the income figure used to calculate your eligibility exactly matches what your 1099-R, your SSA 1099, and any other income documents actually show. A discrepancy of even a few dollars between your estimated income and your documented income is enough to freeze your refund automatically. Here is change number 6. The estimated tax payment deadline hitting seniors with investment or retirement income right now, June 15th, 2026, is the second quarter estimated tax payment deadline for the 2026 tax year. Estimated tax payments for 2026 are due quarterly. Q1 on April 15th, Q2 on June 15th, Q3 on September 15th, and Q4 on January 15th, 2027. NerdWallet. For seniors receiving pension income, IRA distributions, investment dividends, or any income without automatic withholding, estimated quarterly tax payments may be required. Missing a quarterly estimated payment generates an underpayment penalty that arrives as a surprise on next year's return. If you have any income source without automatic tax withholding, verify today with a tax professional whether quarterly estimated payments are required for your 2026 income and whether your Q2 payment due June 15th has been calculated and submitted. Here is exactly what you do right now before June 15th passes. Pull out your 2025 tax return today. Find the deduction section. Verify that the $6,000 enhanced senior deduction appears if you were 65 or older on December 31st, 2025, and your modified adjusted gross income is below $75,000 for single filers. If that deduction is not on your return, contact a tax professional immediately about filing an amended return. As of May 2026, a valid extension gives you until October 15th, 2026 to file. It does not give more time to pay. The amended return window is open and the money is recoverable. Elmira. If you live in a high property tax state, run the standard versus itemized comparison with the new $40,000 SALT cap before your next filing. The comparison that favored the standard deduction last year may have shifted significantly in favor of itemizing this year. If you are a US citizen living outside the country, file your 2025 return by June 15th and pay any balance owed today to stop interest from continuing to accumulate. Verify that your name and bank information on your return exactly matches your bank records. That one check prevents a 4 to 6 week refund delay from a rejected direct deposit. If you have any income without automatic withholding, call a tax professional today and confirm whether your Q2 2026 estimated tax payment is required and whether it has been submitted before the June 15th deadline. One final thing. Scammers are calling seniors right now, claiming that the new 2026 tax forms require immediate payment or account verification before June 15th to avoid a penalty. The truth is that there are no shortcuts, hacks, or secret codes that can boost a tax refund, and anyone claiming otherwise is trying to take advantage of vulnerable taxpayers. The real IRS communicates by mail only. Every legitimate IRS notice has a specific notice number you can verify at irs.gov. If any call arrives claiming you must pay or verify information before June 15th, hang up immediately. Then call the IRS directly at 1-800-8291-040. Social Security Administration. Did you know about all 6 of these 2026 tax changes before watching this video? Drop yes or no in the comments right now along with your city and state. Like this video if it showed you something new. Share it with every senior in your family born before 1966. And subscribe right now because the next investigation covers exactly how to file an amended return to recover the $6,000 deduction you may have missed. The system has rules. You deserve to know what they are. Take care of yourself.